Good morning and welcome to today's video. So today I have two pairs on watch. Those are pound Swiss and euro pound. I hope you had a great weekend, by the way, and I hope you are suitably refreshed and ready for the week ahead. So I'm going to break these pairs down for you now, give you my thought process as always, and tell you what I will be looking for from these pairs. So we start off with my favourite of the bunch, which is pound Swiss. You will remember if you were watching my videos last week that I was looking at pound Swiss. There's been a little bit of development, so I'm just going to analyze that little bit of development on the lower time frames when we get to it. But without further ado, let's break this down for you now. So the reason I'm looking at this is because on the higher time frames, we have this 1, 2, 3 touch structure. Okay. It's fairly parallel 1, 2, 3 touch structure, which has this 1, 2, 3 completed middle section. We generally speaking, when these structures are completed, we tend to rally to the upside if they look like this. Okay, especially when we have this standout liquidity point, which is broken below. Okay, I don't know what's going on there, right? Broken below. We break below, catch people the wrong side of the market. This is what we call mass psychology, where people think that once it breaks below a low such as this, particularly an all-time low, I believe it's a... Okay, my computer's just frozen up. Bear with me. We shall wait till this unfreezes. There we go. We break below. This is an all-time low according to my data. And when we break below these lows, people think it's just going to keep going. And what we see in the majority of cases is it break back in, because to the bigger players, this represents a high area of value for a buy. This represents discounted prices. Okay, so always keep that in mind, that when you see these all-time highs and all-time lows, that is... those are bargain areas of value in this instance for the bigger players to buy up, not to sell this. When it's... you don't sell in business when things are at all-time lows, you buy them. Okay, discounted prices. Okay, so just looking at this potential impulse correction continuation to push higher, because this is a completed piece of structure, which is the natural ebb and flow of the market. Okay, and you can see that we have the same thing again here. We have this 1, 2, 3 touch structure, which taps into, in this instance, taps into this exchange of liquidity here. We have this sharp move down followed by a sharp move up. The sharpness can often dictate how much liquidity is sat there and how aggressively we will rally from that area if we reach it next time around. We have that 1, 2, 3 middle section again, which I was talking about a minute ago, giving me a clue that this is a completed piece of structure when we tap into this area, and that we will likely rally to the upside and get that impulse correction continuation once again. And that's exactly what happens, or certainly what appears to be happening at the moment. Okay, so we break below here. People believe once again that this is now resistance once it breaks below, because apparently support becomes resistance once it's broken below. Well, there are examples of that, but typically when we see these when it lines up with a 1, 2, 3, that is not what we see. So you can see where people thought it was a retest to get short here, then price rallies to the upside. Okay, so many people, even if they do understand, how to use trend lines, a lot of people are so zoomed in that they're not even paying attention to this. And one of the reasons they don't pay attention to it is because they're trying to get rich quick, many of them. Okay, so this is mass psychology 101. Once again, break below, and then we just smash bait straight back in, and then we have that impulse correction potential continuation. And if we just measure the impulses, okay, because the continuation leg out of a impulse correction continuation tends to be of a similar length, we also take it from the break of the trend line, which would be about there, because sometimes the volume which is built up within the correction can dictate how far out price actually travels. Of course, there may be would likely be further corrections along the way, which help price to build more volume for the move to the upside, which would likely take out this high here, which we call the 90% rule. We call it that because it's the start of the piece of structure, and because if we break a trend line such as this, we have a 90% chance of getting all the way to the start of there, particularly if we have a near miss where price comes close to that area of value and doesn't quite tap into it, that makes it more likely that this impulse correction continuation will find its way to the start of this structure here. Okay, so this is kind of like the pulling back, as I said in my last video, the pulling back of the bow. If you think of a bow and arrow, the wider this gets, or the more volume this builds up, that is kind of like the bow on a bow and arrow being pulled back further for the next move to the upside. Okay, price is building volume. As we drill down, you can see we have the same psychology once again. We have this. I'm just going to zoom in here because I think this will make more sense on the 1 hour chart. But in my last video, remember I had this as my area of value. I had my ray line on like so. If I can get it on, right, there we go. So I was looking at this. I had my ray line like that. And as I said, we evolve with the market. Those of us who trade this Falcon strategy, we don't just, stick to a bias regardless. We analyze what the market is telling us. Now I had this 1, 2 drawn as such, 1, 2, 3, okay, and I was seeing this as the near miss and this as the middle section. To excuse the drawing, but with the 1, 2, 3 middle section within this 1, 2 potential 3, we tapped into that area as I was anticipating, and then we pushed up. And there was a key detail, if you remember, why I didn't place a trade on this. We had this push up followed by this flag, and I said to you that what I've noticed is that when we have a flag such as this, if it doesn't have a middle section, so notice when we pushed up, we had this, we tapped into that area, we had the near miss, we pushed up, pushed back down, tapped into that, and then moved to the upside. We didn't have a middle section. There was no 1, 2, 3 in here, okay? So that gave me a clue based on the testing that I've done, the hundreds, perhaps thousands of hours of testing that I've done. That gave me a clue that we were going to move sideways, and that's why I didn't take that trade. I didn't get long on the break of that flag or within it. And what's happened? We pushed sideways, and I said to you, one of the things that made me think that we may be pushing back to the downside is because we had this little sharp hook point here. Feel free to watch my previous videos. We had that, and the wider that this got, I said I could see it forming something like this, okay, where we get a low here, we come back down, we form a middle section, push up, tap into that little sharp hook point that was there, and then push down, and that's exactly what's happened. One thing I did say, though, is I said that this could be a larger bear flag to push lower, but one thing that I didn't consider, it's difficult sometimes to factor in everything, is the fact that when I zoomed in, there's no reason for it to push to the downside, to form a bear flag to push lower at this moment, because price has done what it needed to do, because we have that completed 3-touch structure, okay? So what it could also be, and this is one thing I didn't mention, which I did mean to mention, and one of the reasons why I didn't mention it is because I didn't notice this little exchange of liquidity here, okay? Now we have this little exchange of liquidity there, which caused price to break above this high here. It caused it to break out of all of this. Okay, so when there was an exchange of liquidity here, price broke out of all of this. It broke above this high. That suggests that there may be a lot here. Okay, and it suggests that maybe this is a little ending structure, which is to tap into this area. And one of the things that makes me think that is because we have a little near miss to it. Okay, so you have this little exchange of liquidity, which you can see here on the excuse me, on the 15-minute chart, which caused price to rally to the upside. Okay, so what this might be is a little 1, 2, 3 structure, little reversal structure, which would have this kind of, that 1, 2, 3 middle section there. So if we tapped into that area, that would be a completed reversal structure, which just so happens to tap into that little exchange of liquidity there, which broke above that previous high that I showed you. Okay, but we have to be mindful as well that given how it's formed, okay, and given that it did find liquidity from that little inflection point I showed you there, this could also be the middle section within a 1, 2, 3 to push lower. So with all of that in mind, and because this is, that's not a standout area of value as for example, that one was, what I'll be waiting for today from this pair. Okay, I'll be waiting for price to tap into that little area there, tap into that little exchange of liquidity, push up and then flag, and then I would look to get long on the break of the flag. This may not be ready by the end of the day. It may not even shape up at all. But if it does, that would be a 1, 2, 3, which taps into that exchange of liquidity, which is in alignment with the higher time frame direction, and which just so happens to have a 1, 2, 3 middle section. Again, I know this is a wick, but even so, the lengths of that 1, 2, 3 would be of a similar length to each other. So that length and that length would be of a similar length to each other, those impulses. If we get that, then I'll look to get long on the break of the flag or within it. And even if we were to just cut through that and deem it to be a volatility wick, I'll be able to manage this up to this high for something in the region of 3%, 3.5%. If we get the risk entry within the flag, if we get a flag, okay, that would give us something in the region of, well, we'd have a minimum of a 10 pip stop. That would still be about 3 to 4%, so that would be fine. Okay, so that is pound Swiss. That's what I'm going to be looking for from this pair today. If that alert, which I have there, does not trigger, I will not be looking to place a trade on this pair. Okay, so that is pound Swiss. So let's move on to euro pound. So on the higher time frames, euro pound. Okay, this is a pretty messy one. This can be a difficult one to analyze sometimes. But what we have here, you can see this is just looks a bit like a this is just looks like volatility to me. Okay, we have these massive wicks there. If you switch to the line chart, those massive wicks don't really appear. So we can kind of disregard that as volatility. Okay, but you can see we tapped into I'm not so concerned about this so much, but once after these volatility wicks, what you can see is that you can start to pattern separate. Okay, so if we start to pattern separate, you can see that we kind of have this. We have this 1, 2, 3 there, where we have to some extent we have this little 1, 2, 3 middle section. We tap into that little exchange of liquidity there, which just so happens to cause price to break to the downside and break below these wicks. Give me a clue that there was a lot of liquidity there. Okay, you can see that we have this is more clear on the 4-hour chart. If you actually you can see the little liquidity points more visibly. Okay, so we assume that was a completed piece of structure. If we just zoom in a little bit, we do kind of near miss to this high, but what we do have is this kind of structure here, which has this 1, 2, 3 middle section. So as I say, this is what we call pattern separating. We have that. Then we have this structure here, where we have this. We have this with the 1, 2, 3 middle section. We also have this little ending structure up to the top. You can see the 1, 2, 3 within it. Okay, then we push to the downside. So just doing a bit of pattern separating. Okay, but the bit that I'm more concerned with at the moment is the fact that we have on the 4. You have to zoom down to the 4-hour chart to see this one, but we have this tiny little inflection point here. Okay, we have this tiny little inflection point, and there was enough of an exchange of liquidity to cause price to break out of this massive piece of structure and smash through this low here. Okay, and that was the causation of the move, which started, price moving to the downside. So the cause of the breakout of all of this, which broke the low of it, was this inflection point here. Okay, which just so happens to line up with this 1, 2, 3. Okay, so we have this 1, 2, just seeing this as one touch. When we don't really move away from the overall structure, I'm just seeing this as one touch. Okay, because generally speaking, it's when we have this. We haven't had. This is where the middle section started. So we have this 1, 2, 3 middle section where the impulses within the impulse correction continuation are of a similar length. If we just measure I don't know what's going on here. Right, there we go. If we measure the impulses within this impulse correction continuation, do excuse my voice. Okay, we have this So I was measuring from there to there. If we measure from there up to here, that would take us to just above here, okay? We then have this little, so that would take us just above that inflection point that I just showed you. And then we have this potential impulse correction continuation. And if we measured that, take it from there, that would take us to about the same place as well, okay? We may get something like this, okay, which would change the dynamics ever so slightly. We may get something like this, where we have that at the end, okay, and of course that wouldn't be ready by the end of the day. And if we did, that would take us to just above that area of value that I showed you as well. Um, so that's a possibility. But if we just push up from here, okay, and because of all things considered, and because all of those measurements take us to above the area of value, not necessarily to it, what I'll be looking for is the following. Okay, so I'll be looking for specifically a break above this area of value, not just to tap into it, a break above. Just from experience, I can tell that, you know, if I was to wait for just price to just tap into this area, the proportions and the measurements wouldn't be quite right. So I'll be waiting for that break above. As I say, if you measure that, not generally speaking, when we have an impulse correction continuation, price will fulfill at least 90% of the move before, if we're looking at a reversal structure, before moving in the other direction. And you can see if we tapped into that, that would be kind of 80% of the move. And just to measure that other one again, that other impulse correction continuation, if we were to measure that, if we just tapped into that would kind of be about 80% as well. It wouldn't really be the kind of 90% mark, which is 90+% mark, which is generally where price starts to reverse. So that's what I'm going to be looking for from euro pound today. As I say, these may not shape up at all by the end of the day, but we have them on watch regardless, because as I've said, as traders, we need to remain on the ball. Okay, so I've got a little alert there to see if we can tap into that area. We may form something else. It's important to remember, one of the reasons this is lower down on my list is that little inflection point that I showed you. It's not, it's not the most standout. It is the cause of where price broke this low to the downside, but it's not the most standout. So price could mess around, price could do something else, but we shall see. We just let the market show its hand. And if we did have this, if this entry did shape up, then, I would be able to manage it down to this low here for the as a first target, a kind of minor inflection point for something in the region of 6 to 7%, and then we could be finding our way all the way to the start of this structure, the 90% rule. Okay, what price did or does after that, whether it finds its way to these lows, is another matter. But we have a clear psychological pattern here. These are psychological patterns that we're trading, and of course, if we broke this trend line here, if we broke that impulsively, then we know, which is why this is called the 90% rule, that we have a 90% chance of getting all the way to the bottom there. Okay, and if we did, then we would have something in the region of 14% profit to work with. Whether we got that all in one go would be another matter. But that's what I will be looking for from these pairs today. I hope you've enjoyed this video. I hope you've enjoyed the little pattern separation session, which I kind of did within it. I do that on a regular basis, and that really does help me to cement these patterns that we look for in my mind, so that they just jump out at me. Okay, one of the reasons people have indicators all over their chart is because they don't know how to read price action. Okay, and you can see it on some of the posts that people post. It's just mess everywhere. Once you learn to read price action, and the best way to do that in my experience is to pattern separate, as I was doing earlier in this video, then when you come to the charts, things actually just jump out at you. These patterns literally just smack you in the face, when to many people these patterns would just look like mess. Okay, well, they look like mess because they haven't trained their mind to actually see the patterns. So if you train your mind, you see the patterns immediately, and you don't need all this mess on the chart, all these indicators that people use, which are not necessary in my opinion and experience. But anyway, thanks for watching, folks. I will be back in the next video, which will likely be tomorrow morning. Have a great day, and I will speak to you again soon. Thanks for watching.